All right, let's talk about one of the wildest stocks on the market right now, Jet.AI or JTAI. We're going to break down the story behind its absolutely incredible volatility. So, just look at this. On a recent day, the stock just rockets up to a high of $1.10, a massive, massive intraday spike. That got everybody's attention. But then, on that exact same day, it comes crashing down to just over 55 cents. I mean, that's almost a 50% drop from its peak, all in the span of a few hours. When you see moves like that, you gotta ask, what in the world is going on with this company? Is this some revolutionary tech story, a financial tightrope act, or something else entirely? Well, it all starts with the story the company is telling. See, JTI is going through this huge transformation, and that's exactly where all the excitement and all the risk is coming from. What they're doing is this massive pivot. They're moving away from their original business in aviation software, flight routing, that kind of stuff, and they are jumping headfirst into the AI gold rush. The new story is all about building massive AI data centers. But, a great story is one thing. The numbers have to actually back it up, right? So let's pop the hood here and take a look at the hard data. This is where things get, well, really complicated. Okay, so their latest filing shows they've got about $3.5 million in cash. That's the money they have right now, ready to go to pay bills and, hopefully grow the company. A great way to think about this is like the gas in your car's tank. Sure, it's nice to have a full tank, but the real question is, how fast are you burning through that fuel? A full tank doesn't mean a thing if you've got a huge hole in the bottom. In this chart, wow. This really tells the story. In just 9 months, the company burned through almost $9 million just running its operations. And look, that's nearly double what they spent the year before. So the burn isn't just happening, it's accelerating, fast. And if you zoom in on just a single quarter, you see the same pattern. They brought in about $1.7 million in revenue, but they had a net loss of almost $2 million. They're literally spending more than $1 for every dollar they bring in. So if the business is losing money hand over fist, how are they keeping the lights on? How are they paying for this grand vision of a new data center? I mean, where is the cash actually coming from? Well, the answer is right here in the cash flows statement. It's clear as day. The money they're burning through in operations and investing is being almost perfectly replaced with cash brought in from financing activities. It's a classic fund-to-the-burn strategy. And in their case, that financing came almost entirely from selling preferred stock to investors. Now remember, this isn't money from customers buying a product. This is capital from the financial markets. And that well is not bottomless. This total reliance on outside cash brings us to maybe the single most critical piece of information here. This is a direct warning from the company's own legal filings that everyone needs to see. This phrase right here, going concern, that is not just casual language. That is a massive, formal red flag. It's basically the company's own accountants saying, hey, we are not sure if we have enough money to stay in business for the next year without raising more. That is a huge, huge statement. So with a situation this risky, you get two very different camps of investors, right? You've got the believers and you've got the doubters. Let's take a look at who owns the stock and who's betting against it. And look at this. It is overwhelmingly owned by the general public, retail investors like you and me. Very little ownership from big institutions or even company insiders. And that can lead to these wild price swings because retail sentiment can turn on a dime. At the same time, you've got a decent number of people on the other side of the trade, the short sellers, who are betting the stock price will fall. Now, 4.4% isn't the highest you'll ever see, but it's still a pretty significant bet against the company. But here is the real kicker. To make that bet, short sellers are paying an incredibly high fee, somewhere around 30 to 40% a year. That's the interest rate just to borrow the shares. A rate that high tells you the stock is very hard to borrow, which means there's a ton of demand from people who want to bet against it. So what does this all boil down to? It's pretty simple, actually. It's a race against time. It's a classic battle between a potentially game-changing future and a very, very challenging present. On one side, you have the dream, the big catalyst, this massive new AI data center project in Nevada. If, and that's a big if they can pull this off, it could totally transform the company. This is the dream that investors are buying into. But that incredible promise is smashing right up against the cold, hard reality of the numbers. How does a company with only $3.5 million in the bank and an accelerating cash burn fund a $10 million commitment? That is the multi-million-dollar question. And that right there is the entire story in a nutshell. This is the ultimate question for anyone watching JTAI. It is the core tension defining the stock's future. Can this powerful new AI dream become a reality before that financial clock strikes midnight? It's a high-stakes bet, and we're all watching to see how it plays out.